This is the E-commerce Edge podcast with your host, Jason Greenwood. Mr. Marshall Greenwald, founder and CEO of IoniaPay. Welcome to the podcast today.
Thank you. Glad to be here.
It's so great to have you along for the ride today. We were talking about the fact that you are in Gilbert in Arizona, or just outside. And I was telling you about the fact that a couple of years ago, I went to the Phoenix Open, which is supposed to be like the best weather of the year typically. And I got there on one of those unseasonal years where it was like a blimmin' hurricane, sideways rain and wind. And everybody that I went there that's from Arizona and from the Phoenix area that I went to the Phoenix Open with told me this is like a once in a 20-year weather event, and this is not how it normally is. It's normally sunny and hot, and normally you need to be drinking an ice cold beer in the shade when you're at the Phoenix Open. So that was my last experience when I was there in Gilbert.
Come back out in the fall, and you might get a little rain, but it's very atypical to have that. And what is the Open in March, I think?
Yeah, I
Something
think it
like
is in
that.
March.
Yeah, that's very unusual. But yeah, we didn't give you the best welcome that time, but we'll make a better run at it next time.
I look forward to it. I'll look you up the next time I'm there, but we're not here to talk about the Phoenix Open. What we are here to talk about is IoniaPay. But before we get into that and what you guys do, why don't you tell us how you came to be in this fintech world? Now, I would put you in the bucket of a serial entrepreneur, technologist, etc. But why don't you tell us how you came to be in this space of fintech?
Yeah, a technologist might be a stretch. If you ask my CTO to who writes code, it's definitely not me. I do love technology. So started my payments career for a bank in the 90s while I was in college. Left the bank and started my own payment company in 99. And I really fell in love with solving complex problems for merchants. And I served all different types of merchants, but I found that they all had, I'd say, similar, if not the same problems, right? Number one, like it costs so much to take card payments, right? And we see that's not improving, right? It's getting worse every year, not better. And then number two, when they take a card payment, if it turns out that card was stolen, the merchant's on the hook, but they don't really know how to tell whether it's stolen or not. And then the third piece was like, how long does it need to take to get money from a card to the bank account? It takes about 4 days on average because it's subject to banking holidays and weekends and bankers' hours and everything like that. And it's just a slow, antiquated process. And so I was not shocked that my merchants kind of all described these problems. I was acutely aware. What I was surprised by is that they thought I could do anything about it. Right? It's kind of like go talk to Visa if you don't like the way it works. Like I don't know what to tell you. It's just the way that card acceptance works. But after a few hundred of these conversations, I started to really question that. Like, could I actually do something about this? And so that's what led to the birth of IoniaPay. I'm really trying to solve these problems, and we have products that settle instantly with no fraud risk and a lower cost. So better, faster, cheaper payments for merchants is what we've accomplished. We've still got a long road ahead of us, but it's really exciting and a lot of fun.
Wow, what a journey. And I guess eating your own dog food always makes a lot of sense. If you've got experience with a problem and you understand the challenge firsthand, then going and setting about to solve it is easier if you've felt the pain before, or at least you felt the pain on behalf of merchants before, and you can really transmit that into a perfect product market fit type of solution, right? If you've got existing demand and you're really just going out there to meet existing demand, what a great scenario. But let's set the scene a little bit here for those that maybe are not au fait with kind of how modern hard not present payments typically work, particularly in an e-commerce scenario. What does that tech stack look like? And then how is this normally dealt with today outside of a platform like yours, which is an all-in-one holistic platform? So we think in terms as solution architects around e-commerce, we think, okay, what is the actual gateway that's facilitating the transaction? So it might be your Stripe, it might be a PayPal, it could be any one of 50 different payment gateways. And it could be a pre-auth scenario. It could be an auth and capture. It could be auth and capture at the same time. There's different modalities that work in that scenario. But typically, those platforms either don't offer any anti-fraud solution at all, or they offer a relatively non-transparent fraud solution whereby it's hard to understand what your decline rate is and what the rules around declinature are going to be. So you don't really know how much revenue you're potentially losing on potentially fraudulent, potentially not fraudulent transactions. So there have been third-party anti-fraud solutions, and some of them even take the liability of fraud on, famously Signified and a couple of other solutions out there. Some are pure heuristic-based solutions that help you make a decision on whether to accept a card payment or not from a specific customer. Some do that and provide liability protection for you, but you're paying for the privilege. It's almost like an insurance product that's bundled into your security and anti-fraud product. And then we have the hybrid model of platforms that can kind of do one or both or all of those scenarios. Now, the challenge with that is that there is oftentimes a lot of either custom integration that needs to take place, or it doesn't easily extend into omni-channel environments outside an owned e-commerce solution like a Shopify, for example. And so oftentimes retailers that have maybe an online digital channel, maybe they've got an EDI channel, maybe they've got a punch-out channel, maybe they have offline and retail channels, and kind of never the twain shall meet, so to speak, is that these payments infrastructure providers, they typically are either designed for all online, all offline, or really nothing that can bridge that gap, right? And so I think that there is and I look, when I was a merchant back in the day, many years ago, we just had to accept as part of a cost of doing business that there was going to be a certain amount of fraud. Now, interestingly, there were certain scenarios where even I could tell when an order came through and I reviewed that order manually just as a human being. I'm looking at this and going, this doesn't make sense. The bin number is for this country or whatever. They're buying from us in this country. It's being shipped to a hotel address. It's not being shipped to a home. There's just certain heuristics that we as human beings, I had enough experience with enough fraudulent transactions to know what are some of the little telltale red flag signs to look for to say, this is likely fraud. I probably need to either try to get a hold of this customer via email or phone or whatever before I authorize this item to be shipped. But in theory, we've got much better technology today to be able to detect that with machine learning and AI than I ever could, even with my experience. And I feel like that is the gap that you are trying to fill.
Yeah, I think you hit on a couple of really important considerations. One is that systems are effectively guessing, right? They're trying to say, does this look right or does not look right? And I think the systems are getting better at that. But we still see, according to Visa's published numbers, 3.2% of e-commerce revenue is fraud. 5% of legitimate customers are caught in false positives. And now we have also friendly fraud, which is rising at a rapid rate, and it's approaching the same rate as actual fraud. Now, it's hard to tell the difference, but if we look at those buckets, there's another factor that you have to consider, which is friction. And I'll make my point by making it ridiculous. If you wanted to say, in order to buy from my business, from my website, you have to drive to my store and we have to do blood work and DNA testing to prove who you are, right? You could be really ridiculous with the level of friction and you know with certainty that this is that person, right? But what's most likely is as soon as you introduce friction, you lose some of your customers. And if it's too much friction, you lose all of your customers, right? And so you've got this intricate balance between what I call the 3 F's. So you have friction, false positives, and fraud. Now, the traditional model is you've got this triangle. And if you want the one that's at the highest right now to go down, all you can do is rotate the triangle. So that means you're either going to increase one or the other of the 3 F's in order to reduce the other one. And so I was really frustrated with this because my merchants obviously don't want friction to be introduced in the checkout. They also can't stomach the idea of 5% of their customers just being caught as a false positive. And by the way, this is really frustrating, and most people will leave and never come back when that happens, right? I just had this experience myself. My assistant was buying some flowers. I won't say which website, but one we've used a lot. And for whatever reason, they detected my transaction as fraud. Maybe because it was her account and my card. I don't know. But it just kept declining it. I kept giving her new cards and it kept declining. And then my wife happened to be at the office. So she gives them her card and it goes through. Now, the crazy part about that is her card and my card are linked to the same bank account, right? And it was clearly authorized by us, but they don't know, right? So they were doing their best to look at the heuristics and decide, is this legitimate or not? But they couldn't. Now, in this case, I just said, here, try another card and went through. But many customers, when they're basically caught in these false positives, they'll just walk and never come back, right? They'll go somewhere else. And so it's very costly for businesses to try to manage this delicate balance. The other thing you mentioned is like, these are disparate systems. You've got 8 to 10 companies involved in an e-commerce transaction, which is mind-blowing, right? The merchant doesn't see everything that's happening behind the scenes. The consumer doesn't see all this mess of this network of different companies involved. But every one of those steps introduces cost, delays, and actually risk. And so even though they may be trying to mitigate risk, because you've got data over here that's not visible over here and data over here that's not visible over here, nobody has that holistic view of everything that's going on to be able to determine whether it's really fraud. So we've done something very different, and we can talk about that, but really just breaking down those silos of data and seeing directly between the merchant and the consumer who the actual cardholder is and who's actually authorizing this payment. If those are the same, that's good. It's golden, right? And if they're not the same, then it's fraud. Really easy to know, but instead of having to do a blood test, we do it with technology. So
Yeah, and to your point, there are two scenarios where I run into this friction multiple times a year, and it absolutely infuriates because I do 90% of my shopping online, maybe more, which is I realize that's an outlier. That is not normal. I realize that the average penetration of e-commerce, depending on region, country, and vertical, is anywhere from 15 to 20%. So I realize I'm an outlier. But because I'm an outlier, I bump into this problem maybe a little bit more frequently than your average online shopper who only maybe 2 out of 10 purchases is shopping online.
sure.
So I have family that live in Australia. I have family that live in New Zealand. I have family that live in the States. I live in Mexico. I was born and raised in the United States, lived almost 30 years in New Zealand. I have technically a business that is headquartered in New Zealand, have been living in Mexico since 2023, have a personal bank account here in Mexico, have a personal and business bank account in New Zealand, don't have any bank accounts in the US, but I also have fintech bank accounts. So I got PayPal bank accounts, I got Wise bank accounts, I got bank accounts coming out my backside, right? Some are personal, some are business, but they all link back to me. They all I've already jumped through a million hoops to get those accounts in the first place with showing ID and friggin' passports and residency documentation and every other bloody thing. So I've already jumped through a million hoops even to get these accounts opened in the first place. And then when I'm jump online, for example, for Mother's Day, and I jump online on an Australian florist website trying to order from Mexico using my New Zealand debit card from New Zealand, it throws up all sorts of red flags and I can almost never complete the purchase. So the first thing I usually have to do is use a VPN. I have to relocate myself in the VPN to Australia. Then I have to try to use a fintech card that is likely to be accepted in Australia, maybe a Wise card, and then maybe I can get the transaction to go through. But I usually have to use 5 or 6 different permutations of cards and addresses, both, and I have to, if I have, heaven forbid, I have to use a different billing address to a shipping address because that usually throws up red flags as well, especially when the billing address is in New Zealand. Then the second scenario where I consistently, it strikes fear into my heart every single time I have to buy airline tickets. And I have to buy airline tickets like 20 times a year, right? I do a lot of business travel, and some of the aggregator websites, some of the brokerage websites are real easy to use, and they'll let you use a card from anywhere or PayPal or any other wallet. But if you use the direct airline ticketing portal, again, if your billing address doesn't match your residential address and your residential address isn't in the country where you're trying to fly out from, and if you are not getting a round trip ticket, or if you are, there are a whole bunch of other scenarios where, and then you're trying to check out in a specific currency of the native currency of the card that you want to use. Oh, and by the way, if you're on that website, your home address, your physical address is in Mexico, for example, they automatically want to charge you in Mexican pesos. I don't want to be charged in Mexican pesos. I want to be charged in USD, which you can do because if I go to your US website, you will bill in USD. I want to be billed in USD because my card's native currency is USD. I don't want to pay an exchange. The number of permutations where this has taken up half a day to execute a transaction I need to execute is pretty wild, right? And so I always assume there must be a better way, and I wonder why they can't figure that out, because there are more people living internationally, traveling internationally now than ever before. Why can companies that deal in travel every single day not seem to sort their shit out? It's unbelievable.
Yeah. And to your point, so like you're a little bit of an edge case for sure. Like you're a multinational person, which is becoming more the norm, but it's not the norm yet. But I think what you're pointing out is systematic failures. There's nothing about your billing address and shipping address being different that says that you're not the cardholder, right? that's not a logical tie. What's happened is criminals have figured out that they have to put in your billing address to get approval on the card, and obviously they're not going to ship the products they're trying to steal to you, so they
Yes.
ship them to you. So that fraud pattern that is always necessary for fraud doesn't mean that it always is fraud. This is why we get 5% of legitimate customers caught as a false positive, because we don't have a way to know. That's where our F3 product comes in and changes things dramatically. So we don't look at those heuristics. We're not trying to look at behavior and say, is this legitimate or is this not? We are actually identifying positively, is this Jason and is this Jason's card? And if you know that, then you know it's safe. And if you know that's not the case, it's Jason's card, but this is not Jason, then you know it's fraud. This is with certainty as opposed to scoring and certainty percentages and all these things that others do. Now, I want to point out there are companies in market that will guarantee if they approve the transaction, they'll guarantee you, but they still can't stop the false positives because they don't know, right?
Well, and it's in their best interest to be as aggressive as possible to minimize
Yes.
their risk, right?
Yeah, it's like any insurance product, right? You're going to try to minimize what you cover and maximize your revenue. So we've just said, look, if we redesigned everything from scratch, what would tell you for sure that this card belongs to that person? And the key is this right here. Mobile device is registered with a carrier. There's social media profiles on the account. There's email addresses you're logged into. Everything about us is personal on our phone,
Yes.
right? I remember the days, Jason, I'm aging myself really badly here. I remember when I was in college, my little sister and I shared a cell phone. Can you even imagine sharing a cell phone with somebody today?
Not possible.
No. My wife and I don't even need to get on each other's phones. This is her phone. This is my phone. It's everything about you is tied to that phone. And so if you can identify who owns that phone and then identify who owns the card and marry those two things together, then we have the ability to create certainty. Now, what we do is we send a text message to the phone.
Mhm.
Okay, so there is a bit of friction, but for e-commerce, this is becoming the norm, right?
Yes.
ShopPay sends you an OTP.
Yeah.
A Link by Stripe sends you an OTP. We do a one-click checkout, so you get some convenience add too across the network. But we send you a link. You just click on the link. It takes a couple milliseconds. It says, okay, confirmed. And then you're right back to the checkout. So let's say I was checking out on a website on my computer. I'll get the text. I click on the link, and I go back, and I finish my checkout. But what this does is it tells us that they have possession. We look at the SIM history. We look at whether the device has been used to open up a bunch of accounts lately. We look at all that stuff to stop the man in the middle and SIM swap attacks. But then the key is we go to the carrier and we say, who does this device belong to?
Yes.
And then we take that packet and we send it to the card issuer and say, who does this card belong to? And if those two things are married, there is some fuzziness, right? It could be a spouse's card or a child's card, parent's card, but we can manage all that. But if we know that this card is being used by somebody who has authorization to use the card, we know that it's not fraud. So there's no reason to stop a legitimate customer when you know that it's them.
Yeah, and this is so critical. And yeah, one-time passwords are becoming the norm. Using authenticator apps are becoming the norm. I use an authenticator app to log into almost every single bank account I need to get into. I don't mind that. I wouldn't even mind it if they forced me the first time around when I use their website to hold up my passport next to my face on the computer screen while holding my debit card in the other hand and take a photo of that like the first time around. I wouldn't even mind that. But
Sure.
usually I don't even get that option. I just get, sorry, this card is either the transaction has been declined or there has been a problem. For further service, call customer service. And they don't even tell you what the problem is when it fails. Or they don't even tell you how to fix it. And so it's like, I think most people, especially for high dollar transactions, especially for essential transactions, I think most customers will jump through a few hoops, at least the first time around. If we can capture biometric data, my thumbprint is used to log into my friggin' phone. So like, why do you think it is that most fintech providers, and this is not to slate Stripe or anybody else that are huge international companies, they've done a lot of good in the world to make payments more accessible to smaller and smaller merchants. So I think they've done a good thing. But why do you think it is that most of the payments space feels so legacy still in everything that it does?
Because simply put, because it's legacy. We've got really cool new solutions like buy now, pay later and simple gateway integrations with APIs. We have some really cool kind of dressings on top of it. But the fundamentals of how a payment works haven't changed in 60 years. It's just the same thing it's always been. When I started my payments career in the 90s, we were doing things with, like, you were taking knuckle busters and
Oh
taking
yeah,
in
I had to
card.
too. I remember.
Yeah. Yeah. And so, yes, but if once you submitted that to the bank, it was the same as what we're doing today. It's really, we're layering on top of old infrastructure. Now, card networks have been very innovative. And in particular, Visa, MasterCard, I know we partner with them. They have very much adopted the philosophy that they need to disrupt themselves. And so they have really cool new technology. It's just a matter of how do you go take that technology and make it available through, I don't know, call it 14,000 financial institutions, plus, I don't know, 20,000 fintechs and payment companies. Like, it's a very fragmented market, which is beneficial from a competitive perspective, right? The pricing here and things like that is competitive because there's so many companies. But it's really hard for us to adopt new technology here. Whereas you go to a country where they have one bank and it's like they launch a new payment system, and guess what? Everybody has it tomorrow. Like, it's
Easy.
available.
Yeah.
Yeah. Yeah. But yeah, it's the fragmentation, the embedded kind of is very, it's owned by different people. And there's so many hops that if you upgrade this piece, you risk everything else not being able to communicate with it. So I think what the networks do really well is they have extreme scale. Their authorizations are phenomenal. The fact you can go almost anywhere in the world, tap your card or type your number in and get an authorization in sub 2 seconds,
Yeah.
right? That's pretty impressive,
That's
right?
wild.
And that doesn't matter which bank you're with or which bank the merchant is processing with. It's just basically universal, a good experience. What happens behind the scenes is where I think it breaks down to some degree. And that's where we start to see things like the fraud risk, friendly fraud happening. That's where we start to see things like slow settlement. The money movement is via ACH rails for the US merchants. And we've all seen better, right? You and I have probably both participated in Zelle,
Yep.
PayPal, Venmo, things where you can actually say, I want to get the money right now.
Yep.
And you go look in your bank account and it's there, right? So money movement can be faster, but it's not ubiquitous, right? And it's specific use cases and specific restrictions. RTP network is the real-time payment network from the clearinghouse, the same group that does ACH payments, but they have the ability to move it instantly, but only if you're pushing money out. So if you're PayPal and you've got money sitting in a wallet, you can send money out to somebody. That's how they do it, right? It's not all RTP. There's a couple options, but they can send that money in real time. But there isn't a way currently to take the money from a card and then move it in real time all the way through to the recipient as a merchant. So we've solved for that with what we call instant direct payments. We take this network of 6 to 8 companies, we collapse it down, we use Visa, MasterCard for the authorization, and then we do the money movement on our rail, and we get that instant end-to-end settlement. And then we layer on top of that the F3 product to eliminate the fraud. And funny story, you were asking like why it feels so legacy, but necessity is the mother of innovation. We developed our payment rail first, and then when we got hit with fraud, we went, oh, when you move money instantly, you have to make sure before the transaction that it's not fraud.
Yes.
Because once it's gone, you
It's
can't do
gone.
anything
You're
about
not
it.
going to claw it
Yeah.
back.
Exactly. So we built our F3 product specifically to protect ourselves. And then our enterprise merchants were like, can we put that in front of our whole payment stack? And so we built it as a separately commercialized product specifically for their needs.
Now let's talk about 2 other areas where friction was introduced, then it was removed, then added again. I remember back in the day when 3D Secure was first introduced, it was the most horrible product ever invented by fintechs. And I remember that this is going back over 20 years ago now, when they first introduced 3D Secure and they forced us to get any anti-fraud protection, we had to introduce 3D Secure as part of our hosted payments page, but our conversion rate fell through the floor because that first iteration of 3D Secure, people actually had to log into their internet banking. They had to get a code from that. There was no mobile app. There was nothing. They had literally had to log into internet banking on a desktop, get a code, go back to the website, paste the number in, and then they'd let the transaction go through. This was a nightmare scenario for all merchants, but we had to swallow it because otherwise all the fraud risk fell to us. It was really bad. Then they realized after about a year of this, maybe a year and a half, at least down in New Zealand, oh my God, this is killing e-commerce because this introduces way too much friction for way too little value to cover way too few fraudulent transactions. So they pulled their horns back in and they said, okay, we're we're going to rejigger this whole 3DS thing to where it's more dynamic and it's more automatic and all this sort of stuff. Then, so that sort of got put to bed. It was never really perfect, but it was much better than what it was originally.
Yeah.
And then, of course, mobile apps and mobile PIN authentication, dynamic number integration, where it would say, type in the number that you see on the screen of your phone. Okay, cool. That will authorize it. And that made it a little bit easier. Then we had authenticator apps. That made it a little bit easier. But then when I moved to Mexico, I encountered the very first instance of dynamic CVV I'd ever seen in my life. So now when we log in and we make a payment with my debit card online in Mexico using my Mexican debit card, I now have to go to my mobile banking app. I have to go into the digital only debit number for digital transactions. I have to authenticate. I then have to click CVV reveal. It'll reveal the dynamic CVV, only lasts for 5 minutes. Go back to the website, type the dynamic CVV in, then the transaction goes. So I cannot store my CVV in any wallet anywhere because it's useless. And that introduced a 3DS level of restriction.
Yeah.
Now, what's interesting about this is that I have discovered through trial and error that there are some merchants that have the ability to tokenize a card based on a one-time entered dynamic CVV, and they can do rebilling without you entering the dynamic CVV ever again. So on subscription-based, like with Starlink, they can hit my card. I entered the dynamic CVV one time. They bill me every month, and they never have to ask me for it again. It seems to be that there are other merchants that they don't have that authority, whatever reason, they're not approved for it or whatever, and every single time you have a transaction with them, you got to re-enter the CVV. So talk me through dynamic CVV. It doesn't seem like that's common yet in the US. Do you think it's coming?
I actually hope not. It probably felt to you like a step backwards in the user experience, right?
Yes.
So here's what they're trying to solve for. We have, as we being the payment industry, we have only available to us a few tools to verify a transaction. Those tools are mostly what you call one factor, meaning there's something you know.
Yes.
That something you know is, if it's static, then criminals can steal it one time and use the card until it gets reported stolen. This is fundamentally the problem with the way the networks are designed. And again, back in when they were invented, there weren't any other alternatives. But for heaven's sake, we used to have books that we gave merchants that had all the card numbers published in them, right?
Yes.
You remember that? And
Yes.
they'd look through the book and find the card number on
Match
there.
it.
We certainly didn't anticipate where things would go very well. So looking at that CVV, we have basically two sets of numbers that we can verify against for a merchant. The first is the address, and the second is the CVV. If those are stolen, which they are when the card number is stolen, then the card is not secure. Like, it can be used arbitrarily easily anywhere in the world, right? So what they've attempted to do, number one, PCI DSS, which is the set of standards around storage and transmission of card data for merchants, processors, everybody, software companies, everyone who ever touches or influences how cards are processed has to comply with these rules. They don't allow the storage of the CVV. So the merchants you're seeing that have to ask you for that regularly, what's happening is they are relying on the CVV field to be passed as part of their approval packet.
Oh.
Now, the ones like Starlink, they're more sophisticated. What they're doing is they're sending one authorization request to the network, and then they capture something called a network transaction ID that proves that they did a CVV verification the first time, and they don't have to do it on future billings. So that's the key to not having to ask for the CVV on a recurring billing transaction. But many merchants don't have access to that, either gateway limitation, processor limitation, or whatever. But obviously Starlink has developers that build all this out. They probably have direct access to do this kind of thing with the card networks. So to speak to that specifically, but I think the future of how security will happen with cards is still going to be it's still going to be separate entities doing it. I do see some implementation at the network level, but you got to think about it like this. You've got the card networks here, and then you've got two sides. You've got the merchant acquiring side, and you've got the issuing side. Both have their own security concerns, right? The issuer wants to make sure that this transaction was authorized by you as the cardholder and make it simple and fast. And they have, it depends on the card network, but between 200 and 300 milliseconds to respond to an authorization request.
Wow.
So they don't have a lot of time to say, oh, let's go introduce some additional steps that we want to go check. They have to be very quick. And so this is where the 3DS does kick in There's a couple flavors of 3DS. There's the 3DS that requires a bank challenge. And so this would be what you described as like logging into the bank, putting in a code. It's gotten a little better than that, but it is different per issuer. So you could
Yes.
have your Chase card and your Capital One card go make back to back transactions at the same merchant and have a different user experience because the bank itself has a different challenge mechanism.
Yes. So
That
like
could be things
Wise,
that,
for example, is different. Even in the pure fintechs, like a
yeah,
Wise, the way, and it doesn't require it for all. What's weird is it does not require it for all transactions. Only some transactions does it
yeah,
say go log into your Wise app, approve this transaction before it can go through. And I think sometimes it's based on where the transaction's being done, who the merchant is, what security they have on their side, and I think it's based on transaction value sometimes as well. But there's very little consistency to that, even just with Wise itself. It feels a
yeah.
little random.
Yeah, and it's not random. It is definitely algorithmic, but the number of factors could be really high, right? It could be
Almost infinite, really.
location, dollar amount, velocity. The merchant actually could actually impact that. That merchant has more chargebacks, or their MCC has more chargebacks typically. So there's a lot of factors that can influence whether the issuer requests a challenge on the transaction. There are other flavors of 3DS that don't require a challenge, including one that's called data only. There's not as much benefit to the merchant to use it, but it does it without introducing any friction. It's all invisibly done behind the scenes. They do have to do some. They have to do gather more data on the front end, but there's no customer interface that's being changed on the transaction level. So I think the future though will be fintechs that are providing a solution on the merchant side and fintechs that are providing a solution on the issuer side. And that is part of the issue is you go get a very successful fraud indemnification company on the merchant side and they still don't have all the data from the issuer. And
Yeah.
then the issuer still don't have information from the merchant that indicates whether it's legitimate or not. And so this is really that the data silos will continue because it's such an enormous platform. There's so many companies involved. When somebody wants to disrupt that, you either partner with people who already have a large swath of the market, or you go out and try to gain ground on your own. Either approach means you don't have visibility to the other side of the transaction. So what we've done differently with our F3 product is we are actually taking the data from the merchant, which is things like the IP address and the geolocation, all the stuff they gather from the e-commerce site, plus what the consumer gave us, then tie that to the mobile device, and then we put all that data together and send it to the issuer. And so now we've got the merchant side, the consumer side, and the issuer side. Marrying that together has no risk if it matches. But no one else has been able to break down those silos and really get that connectivity from end to end. And I think it's more of a mindset than anything. Like they're thinking, I serve the merchant. I'm going to go build an integration to the gateway and their e-commerce platform, and I'm going to help them with fraud. And I think as an industry, if we want to really truly improve everything all the way across the network, we need to actually think of it ground up. If we built a card network in 2026,
Hmm.
would we be relying on things that you know, like address and zip code, to secure a transaction? 100% no. There's no way that would be the approach that the industry would think is the right approach, right? It's just dated. So the approach we would use today would be something more, in my opinion, be something more take a mobile device, marry it to the ownership of the card, and then use that to authenticate with a token. Something like that would be what
Yes.
we would do. Ultimately, we want to build this to be frictionless. We're not quite there yet, but being able to actually get the data sources is step one, being able to marry it together and say whether it's fraud or not was step two. That's what we've just launched. And then I think phase three is eliminate that friction and do it, behind the scenes so the consumer doesn't even have to be involved. We're getting closer and closer to that as we go along, but you have to really think of it from the ground up and not think, okay, what exists for us to verify transaction today? Oh, address and zip code and CVV, right? That's just not going to cut it anymore.
And what is your thought? What are your thoughts around physical security or physical challenges? Because I have yet to anywhere in the world either my card works, it doesn't work, and there is kind of no in between. Meaning that if I'm using a foreign card in a foreign country and it's a New Zealand debit card and I'm using it in Mexico, half the time it'll work and maybe half the time it won't. And but if I'm using a local Mexican card in Mexico, it will work 99.9% of the time. And it feels like with a combination of QR codes, terminal technology, challenge options, 3D secure options, it feels like we could introduce an additional layer of security at the physical terminal that would marry up the physical card present experience with the digital experience in an app or something like that, where,
Yeah.
I don't know, it pops up with a QR code on the terminal if it thinks it's fraud. And now I got to scan it with my bank app. And then the bank app reads it and goes, sure, this is a legit transaction, let it go through, or whatever it is, right?
Yeah.
Because we still have a lot of physical fraud where somebody steals a card, they walk into a shop,
Yeah.
it might be a small or a large purchase, they swipe it through before it's reported stolen, and they can steal a whole bunch of goods from their local stores. And I certainly want that to be prevented. If I ever lose my wallet or something, I certainly
Yeah.
want that to be prevented. But that can be based on physical location of the terminal versus where the cardholder should be based, all those sorts of things. But it feels like physical card security is even further behind pure online digital card security and the
Yeah.
user experience associated with that. Do you agree with that sort of assessment based on my experience, or am I out of my mind?
No, you're definitely not out of your mind. It's funny how much overlap there is as far as what's happening behind the scenes between a card present transaction, a card not present transaction, except that in card present transactions, there's almost never an additional fraud layer. Almost never.
Yeah.
And so this leads to the two outcomes we talked about earlier, which is false positives and fraud. And we've almost all been subjected to the experience of both of those. So I'll give a couple examples. My card recently was used in Florida for a card present transaction. I love Florida, but I haven't been there for a couple of years. And I know it wasn't me, so I had to go dispute the charge. So clearly that merchant system didn't detect that. And it was a fairly substantial transaction. I think it was like $350 or roughly around there. So you would think that they would have wanted to make sure it was legitimate. But they don't really have great systems for retail implementations to determine this, just like they don't for e-commerce. And there's less for physical card present transactions than there is for e-commerce. The flip side has also happened, right? So every summer I like to take the family to California. And I remember this just a couple of years ago, but we had stopped along the way at a gas station, got some food on the way, as you do. It's about call it, with the kids, it was like an 8-hour drive, but it should be like a 6.5-hour drive. So it's along the way, there's all these transactions occurring in Arizona, where I live. And then all of a sudden we're in California.
Yes.
And all of a sudden my card won't work. I can't pump gas. I went to buy board shorts for my daughter to go to the ocean, and the card declined. It was just like constantly. And I was like, okay, they should have seen that I booked a hotel.
Yes.
Located in Newport Beach, California. They should have seen all of these gas station purchases,
along
food
the way.
purchases. There's a very clear
trail
plan that shows I'm trying to go to California and this is legitimate. But they don't work that way. They basically just go, hey, something was inside the bounds, we approve it. Something's outside the bounds, we decline it. And that's why the user experience can be fundamentally broken for the consumer. But think about the poor merchants who, that merchant in Florida got burned for $350 on my card. Who knows how many other merchants will get burned by that, right? But it's a multi-billion-dollar problem. But the actual cost of fraud, this is the really ugly part. The cost of fraud is much higher than the dollars lost. So on average, for every dollar that a merchant loses to fraud, their cost is $4.61. So think about that for a minute. Almost 5 times the cost, which means this is $1 trillion a year problem globally. And it's getting worse, not better. So right now, they anticipate that AI tools available to criminals will enable them to increase their successful fraud rate by 45 to 46% over the next year. It's already huge, right? And they anticipate it'll increase. And simultaneously, I'm sure you're familiar with the VAMP program.
Yep.
So Visa and MasterCard are trying to figure out how to put pressure on everyone to really go implement the right fraud controls and do what they're supposed to do to protect the merchants and the ecosystem. And to do that, they're saying, look, if you're above 1.5% chargeback ratio, you're out of spec, right? You're on you could become monitored and fined and all this kind of stuff. 1.5% is literally less than half of the average rate of fraud for e-commerce merchants, according to their own reports. So we're saying 3.2 is the average. You have to be below 1.5 or we're going to fine you or penalize you, or you could lose your processing account. And we expect it's going to go up to about 4.5 to 5% over the next year. So this gap is getting bigger, not smaller. And so we do have to think about like both card present, card not present, the attention is on card not present because that's where most of the fraud activity happens. Think about it. If you could put yourself in that mindset for a minute, you steal a credit card number from somebody and you want to go use it, you're probably not going to go walk into the business and risk being arrested.
Yes.
You would rather go turn on a VPN and go do your shady stuff online and have it drop ship somewhere that's not tied to you really. You paid cash for an apartment building, whatever, right?
Or,
It's
or you're
crazy.
staying, or you're staying at a hotel. You don't put the name of the hotel there. You just put the address
Yeah,
of the hotel. It gets delivered while you're there, and then you're buggered off the next day.
that's right. Yeah. And so the criminals have figured out ways to do this with lower risk of getting caught, but they do get caught. There was a, I think, 17-year-old kid who stole out of when my ex-wife and I were married, stole her wallet and my wallet that she had borrowed for a minute and forgot to take out of her car. And they broke into the car and stole everything out, stole her cell phone. And interestingly, this is a funny story. I won't tell you the whole thing because it's kind of long, but I tried calling her cell phone, not yet realizing our stuff had been stolen. So I'm
Oh,
calling her cell phone, and the guy answered. It gets better. He says, "Speak quickly." And I was like, "Excuse me?" And he goes, "Speak quickly." And I'm like, "Who is this?" And he's like, "Who is this?" And all of a sudden, I realized somebody stole her phone. On the fly, my brain's like, "Oh, duh, that you're talking to a criminal who stole her phone." And so Jason, I said, "It's me." He goes, "Me who?" And I said, "Dude, don't mess with me. It's me." And he's like, "Oh, okay. Are you still coming by?" And I said, "Yeah, but you know me and directions. I'm terrible. Like, where exactly is it again?" And he tells me it's the third house on the right. It's blue, and there's a white Bronco out front off of 7th and Oak, something like that. So I call the PD and I tell them this address. They find this white Bronco in front of a blue house off of 7th Street and Oak in Phoenix or something like that. And they follow him to the casino. And he gets caught in the act of using my ID and my debit card to pull out $15,000 at the cashier at a casino. So they arrest him on the spot. He had 36 people's IDs on him and even more. I don't know exactly how many debit cards and credit cards he had stolen. So yeah, pretty crazy. But he was a minor, but they tried him as an adult. I don't know what the end result was. I didn't follow up to find out what kind of jail time he got. But they do get caught, right? And they are dealing with not like local law enforcement only. If it's on the radar for fraud, it can actually be, if it's high enough, it can be Secret Service. I
Feds.
mean, it's really, they're messing with federal prison time. But there are criminals who get away with it, and that's why we see these numbers. And it's not going to get better because there's such an incentive for them to do it. But the part that I think is more frustrating to me in some ways is the friendly fraud because it's been socially acceptable now to just rip people off. People don't think about it as fraud, they think of it as like gaming the system,
Yeah.
right? But it is fraud, right? And so, friendly fraud, for those who are listening and may not know all the details, it's basically anytime somebody actually authorizes a purchase on their card and then contacts their bank and says that they didn't authorize it.
Yep.
And this happens in a couple scenarios. One, there's buyer's remorse.
Yes.
They bought a big item and they're like, "Oh, I shouldn't have spent that. I can't make rent." And so I need that money back. And so they go tell the bank. It's the easiest way for them to get their money back.
Yep.
The second is when I'd say they planned it ahead of time, right? They go in, they make the purchase, they know they're going to dispute it. Those are the two most common. There's sometimes a third, and I think this one's a little bit insidious because it's hard to track down, which is they actually intended to pay for and keep the product. Something wasn't exactly right. Their shipment took too long. It was not exactly what they thought it was. It didn't fit quite right, but they themselves may have been past the return policy of the merchant.
Yes.
And so they feel justified to just go dispute the charge, even though it was legitimate and it wasn't a stolen card. But they say, "Hey, I didn't authorize this." So this is an ugly scenario because how do merchants tell the difference between that and true fraud? The report that comes to them is the same. It says it was unauthorized,
Yes.
right?
I think there's two other scenarios where I've seen friendly fraud. One is where someone intentionally they identify merchants who don't have real-time synced systems, for example, for loyalty or returns or store credits or those sorts of things. They will purchase a product, they'll return it. So they've gotten loyalty on an order. They have
Mm-hmm.
received all the loyalty points on an order. they either fully return the order or partially return the order. Maybe it's only one item on the order. So if the merchant doesn't have a system whereby they can refund just a portion of the order, therefore only claim back a portion of the loyalty, oftentimes they'll just say, you get to keep the loyalty on the whole order, or we don't even deal with the loyalty, even if you return the whole damn order. And then sometimes they won't even require the physical return of the goods, so the customer gets to keep the goods, plus they get the store credit, plus they get the loyalty. There's just all these scenarios where if these systems all don't share data with each other in near real time, and somebody's purchased online, but then they physically go to return in store and the system hasn't synced overnight between the ERP and the POS system, there's a lot of gaps in these systems that allow for friendly fraud that you're not aware of unless you've been a merchant. And then you uncover every single scenario, and they call it leakage. It's the same as they plan on a 3% leakage of physical goods walking out of store where somebody's ripped the scan tag off, or they've put a T-shirt over a T-shirt and they walk out the door. They treat it as a cost of doing business, and they factor it into their cost of doing business. But I think it's something where if these systems shared data in near real time, and they were all integrated at their base layer, this could never happen. It literally could not happen. And that's where I think we ultimately want to get to. Because if you're a big behemoth of a company, okay, 1 or 2% worth of shrinkage is not that bad. If you're a small mom and pop shop, 1 or 2 or 3% could be the difference between you staying in business and going out of business. The final one is, and I've had it happen to me through no fault or intent of my own, another friendly fraud scenario where I bought a thing off Amazon. They, in theory, sent it to me. In theory, it was delivered. And I'm like, it was never delivered. It was not delivered. They even showed that there was some sort of a signature on the delivery. And I'm going, that is not my signature. Like that, either the courier signed for that, or they shipped it to the wrong house by accident and they signed for it, or something like that. But I never freaking got this good. So they will do a chargeback against that person. And then 3 days later, it turned up at my doorstep, probably because the courier got wrapped across the knuckles, and all of a sudden they miraculously found it in the van and it turned up. But by that time, the merchant had already had a chargeback issued against them by Amazon, and there was nothing I could literally do about that.
Yeah.
And I even chatted to Amazon. They said, don't worry about it. That we'll deal with that with the merchant, right? So I think there are legit scenarios where merchants end up taking it in the backside, and they really shouldn't have to.
Yeah. And I can tell you've taken your lumps as a merchant because you understand this stuff really intently from that perspective. And there's something about your perspective that I think is fairly universal. And it was actually what drove me to start IoniaPay, is that merchants just have to accept it as it is. You've said that twice, once about fraud and once about friendly fraud. And I think that needs to change. And so we're on a mission to change that by building the tools around what we call a zero risk processing environment. So today you have all the risk is on the merchant, and you have some tools to help mitigate the risk. We're saying, look, just eliminate the risk and create an environment where there is never any risk, right? And that's how it should be. And that's attainable, but we invite other fintechs and other payment companies to come get involved in this and do the same thing, because we can only fight fraud so much ourselves. And when it comes to, beating fraudsters, the only loser is the fraudster.
Yeah.
Right? These fraudsters can be organized crime rings, they can be terrorists, and they can be state-sponsored actors from North Korea, China, and Russia. They can be big groups, and they can just be individuals with no morals and some coding experience, right? So there's a wide range. But what's happening is the fraud that's occurring is it's actually creeping into the cost centers. Obviously, political stuff aside, we have a lot of inflation right now. Like everything's more expensive. That will continue regardless of all the political stuff that may change over time, because the cost to merchants is rising.
Yes.
Right? Direct card acceptance cost, plus the fraud cost, plus the tools to try to prevent fraud, plus the false positive cost. It stacks up to currently between 9 and 12% of e-commerce revenue.
Wow. That is huge. Wild. That is wild.
So think about if you had a 30% margin on your product, and now you got to factor in about 10% of that's just going out the door. It goes beyond leakage, right? Like I'm not saying the ship is sunk, but I'm saying it is sinking. There are holes in the boat and it's taking in water. And it's got to get fixed because this costs money for the consumer, right? Ultimately, if as a business your costs go up, you pass it on to your consumer. So everyone's going to bear the cost across the economy. And unfortunately, it's in the areas that are sometimes critical. So
Yes.
you mentioned 1 to 2% of grocery stores only make 2 to 3%. And the biggest grocery stores,
Yeah, yeah.
they don't have much margin. Can you imagine if they had a 2% fraud rate all of a sudden? They
They'd be out of business.
And then where are you going to buy your food if someone goes out of business and they were your local grocer? Like all of a sudden, the cost of food goes up everywhere.
Yes.
If you have one of these large chains go under, you're going to have a major crisis. Now, again, I think they're far less than 1 to 2% today because they invest very heavily in preventing it. But they have entire teams on their operations team that are fraud experts, and they're doing fraud reviews or reviewing transactions and consumers, especially on their e-commerce. Which, by the way, I was shocked. I can't say the name or the exact amount, but one of the larger grocery companies in the country, I was shocked that they're doing tens of billions of dollars in online orders every year. I was like, I know my wife and I use Instacart to place orders. We use the Walmart.com sometimes, Fry's. We do that sometimes, but I would not have anticipated so much volume. But since the COVID pushed people to do this,
Yes.
it's become now like a convenience, right? And so I couldn't tell you the last time I set foot in a grocery store
Me
because we
too.
just do it all online.
Me too.
Yeah.
Because actually, I've always hated grocery shopping. I've always hated it. And I tell you, I'm willing to pay a little bit more for delivery and everything. Just to not have to walk the aisles and put stuff in my cart and wait in the checkout or go to self checkout. I'll pay a premium for that every single day and twice on Sunday.
You know what? My wife would laugh at this, but when she sent me to the store to pick something up at the last minute, it's the worst 2 hours of my day. And it's
Yeah.
like to pick up one or two items. I just can't find anything. And I know it's me. I know it's not the grocery store because other people seem to find stuff. I'm just not cut out for it. Whatever it is, I get overwhelmed with so many products lined up and so many aisles. And I'm like overthinking it. And I'm like, I'm staring right at the product and I can't find it. So I'm like, hey, I type in the name of the product and I click the button and then it gets delivered to my house. That's pretty easy.
It
So,
is. It is. I think you and I are not the only ones that hate physical grocery shopping. My wife even hates it too.
yeah.
And she normally likes physical shopping, but not grocery shopping. She likes shopping
No.
for everything but groceries. So I think
Yeah.
we're all on the same boat there. What's next for you guys? And do you see yourselves as a drop-in, complete end-to-end replacement for the Stripes of the world, for the PayPals of the world, like at least from a merchant customer facing perspective, like at checkout? Do you expect to be just another gateway provider that has a whole lot more benefits that come along for the ride? Are you pre-gateway? Are you like, where do you see yourselves in the pantheon of sort of service providers to e-commerce merchants in particular?
Yeah, it's interesting because we don't really fit cleanly in any of the boxes of what exists today. What's interesting about that is we sit on the front end of the gateway between the merchant website and their gateway typically. Sometimes the gateway is integrated to us and then we sit after that. But typically the merchant talks to us first, right? Make sure it's legitimate. If I can route it through their payment rail and get my money faster and cheaper, do that first. And then we pass it on to the gateway if we can't process the transaction. But like architecturally, we sit way below that layer.
Mm-hmm.
So we're more of a payment rail with a fraud tool. And so the payment rail, think of it more like you've got a Visa, MasterCard settle on ACH. In our scenario, you authorize with Visa, MasterCard, and you settle on IoniaPay's platform. It's a different settlement mechanism. And so what that means is we go to market through the payment companies. We don't go direct to find merchants. We do have merchants come to us direct, but we have like reseller network of payment processors, financial institutions, gateways who integrate us into their tech stack and then bring us to their merchants. And so we don't have like organic competition because let's just say you were with Fiserv and they were one of our resellers. They're not today, but just as an example, they would be taking some of their volume and placing it with us because it's more advantageous to them. As opposed to us trying to fight over the business with them, they're bringing it to us. And so that go to market has been very effective. As far as what's next, we really are focused on the e-commerce experience, but we do need to solve for a couple things. One is as many e-commerce integrations as possible. We've got,
Mm-hmm.
I don't know, 14 or 15 in the works right now. That includes Shopify, WooCommerce, Magento, Wix, et cetera. Like all of the big ones, we need to be integrated so that a merchant can just turn it on. They don't have to do any custom development, and they can work with us directly. We also do need to solve for the physical world. And you may have given me an idea actually on the call. You may not have even realized this when you said maybe it prompts you and you scan with a QR code. It's actually an interesting thought. I'll have to run it down a little bit further and see if there's something there. But what we want to do when it comes to the physical world is provide that same level of protection to the merchant, but not require an actual SMS to be sent to the customer.
Yep.
And this comes from the fact that in some stores, especially big stores, grocery stores, and home improvement stores, you may not have cell phone service.
Yeah, you
Right?
probably
You may
won't.
not be able to get the text. Right? Yeah, these big metal buildings, it's hard to sometimes get cellular in there. And if you're not on the Wi-Fi network, you're not going to get the text until you get in the car.
Yes.
So that's reason number one. But can you imagine also you sit down at the table at a restaurant, you hand them your card, you're not watching for a text message to your phone, right? So there's certain scenarios that we need to solve for being able to provide that same level of protection, instant settlement of funds, lower costs on the transaction overall without that friction. And so we're working towards that. The teams have got a lot that we're exploring, but we're not quite there yet. So that is the next phase for us is friction reduction, both for the consumer experience and for the merchant implementation.
I love it. I love it. If you could sprinkle your brand of fairy dust on the fintech payments industry for e-commerce specifically and change one thing about it at the snap of your fingers, what would it be?
Oof. I think I don't even know what it would be called, but if we could have one point of interface that connected everything, think about how many, I just named 4 or 5 e-commerce platforms. There's hundreds or thousands of different e-commerce platforms. And then you have all the different hosting platforms. And then you have all the different code types that you could use on your website. You have all the different payment gateways, and then you have all the different payment processors. The number of iterations is
Infinite,
astronomical.
infinite, really.
Yeah, almost infinite. Yeah, it's astronomical at the best. And so, if it could be done, if I could wave my magic wand and make it happen, having one place that everyone integrates to make it compatible with everything else, that would allow these merchants who are getting scammed to have access to the best in class tools. It would help the merchants who are overpaying on whatever types of costs they have to get better costs because they have access to things that I don't want to call it anyone specific, but a lot of these e-commerce platforms say these are the only options you have. Right? And if you only have those options, there's not a lot of competition, and so your price goes up. Right. So there's a lot of these walled gardens that just create additional costs for merchants that doesn't need to be there.
Yeah, and look, it obviously is possible because, like, I use the ARC app, which used to be called the Dollar app. Like, it standardizes on USDC as the intermediary currency. And of course, we know that blockchain transactions are nearly instantaneous globally. So I can take a payment in pesos. I can convert that money into any currency I want after USDC. I can move it around the world. I can move it and settle it into any international bank account, business or personal. It's real easy. When I make a movement of funds from Wise into my local Mexican bank account using a Mexican clave, that happens in about 3 seconds. So I know that transactions can be faster. Like,
Yeah.
I know in some scenarios they can be nearly instant.
Yep.
And I just wish that those, whatever environments those are that facilitate those near real-time transactions with very high security natively piggybacked on the back of them, and the ease of use of those apps that are tied to those transactions, like, they are so easy to use, they're so convenient. I've simply, because of the internet connection challenge that happened, because I travel internationally a crap load, and oftentimes I'm somewhere where I can't easily get internet or whatever it is. When I need to get into, like, I can't receive a text message, for example, and so therefore that was what was being used for most 2FA things internationally. So what I did, and what has been a boon to the industry, is their support of authenticator apps for 2FA, right? And so I have gone into all my banking apps, and I've converted everything from text-based 2FA authentication to authenticator app. Because remember, when I'm international, I'm also oftentimes using eSIMs, local eSIMs, and so I can't receive the text message on my local SIM card. And so that alone, just the apps supporting authenticator app codes from my phone, just that alone has been a game changer. But we still got a lot of work to do, I think.
Absolutely. And like I said, you're an edge case, but at the same time, you're just pushing the current systems to their breaking point more frequently, but we
Yes.
all do it, right? We all do something that causes it to break and not work for either the party on the receiving end or the sending end. And that's really frustrating. Oldest daughter was trying to pay rent, and the rent payment system was down. It was the last day she could pay rent before it was considered late, and they had late fees. And so the next day she goes to the office, she shows screenshots, and they're like, "Sorry, it's now late. It's in our system. We can't do anything about it." And so I had to go get involved in talking to the landlord about this. She proved that she tried to pay on time. Your systems were down, and you don't offer any other payment methods. What is she supposed to do? But we rely on these so much for everything we do. It's like if we can't make a payment somewhere, like you can't get the products or services you need, and we take it for granted, right? It just typically works so well. But we're talking about that 3% fraud and that 5% false positives. That's still a big portion. That's
That's eight
8%.
percent.
It's
Wow.
8%. Yeah, over eight.
Wow.
So it's still a big chunk of the time that something goes wrong just within the fraud environment. Now you've got other issues that can occur. But yeah, we really need to look at this holistically and say, how can we make it as simple as possible for the consumer experience and at the same time make it safe and secure for the merchant? And then how can we do this efficiently, right? You mentioned we can send money instantly person to person, no problem. But when it comes to merchants, they wait several days to get their money. So
Yep.
we fixed that, but I think we really are inviting everyone to rethink how we approach payments, and at least in the United States, if not globally, and figure out how to join us in this revolution to make it safe, secure, and instant. And that's what we're looking for.
I love that. I love that. What's the I'll drop a link to your LinkedIn profile and the website in the show notes. Other than that, what's the best way to get a hold of you and have a chat about all things payments management inside your business?
There's a form on our website. There's some great tools on there. We just launched a new website. It actually has a calculator. If you're a merchant, you want to look at how much you'd save in fraud savings. It tells you right there what that would cost you and what it would save you. So great tools on there. You can always reach out there. I get copied along with some of my ops team and sales team. If you reach out on LinkedIn, that's great. The problem with LinkedIn is I have, I don't know, 7 or 8 thousand connections on there. So I get a lot of spam messages too that I have to wade through. So it might take me a little bit longer, but really looking for collaborations and opportunities where we can help make a difference for our business.
I love it. I love it. Marshall, it's been a fabulous time talking to you
Great.
today. Now we're at the point where I get to flip the script. I get to hand the microphone over to you. I get to let you ask me one question, any question you like. It could be personal or professional. So, Mr. Marshall Greenwald from IoniaPay, what is your question for me today?
So I get only one.
I'll let you have two.
Awesome. Did that one count? No.
No, no.
All right. On the personal front, you travel a lot more internationally than most people. Is there somewhere that you think is underrated? Like you've got to go stay for a week and live locally here. Is there somewhere that you just like people don't have on their map, but they should?
The most recent place that my wife and I went to that we were blown away and didn't expect to be was Malaysia. We were in KL. We spent a week there. My wife's Asian, and so we came back. So her family lives in Auckland in New Zealand. My family lives in Brisbane, Australia. We are on a 2-year cadence to visit family. And the most recent time, we came back via Southeast Asia. So we did Singapore, we did Malaysia, we did Korea, we did a couple of other stops. We did Bangkok and Thailand, and we were just absolutely floored by the combination of ultra modern society, very fast internet speeds, very low accommodation costs, great cultural sites and beauty. And we were just really struck by the combination of old and new culture melding together in one place and it not costing your right arm to
Yeah.
enjoy that. That we took photos of the Petronas Towers at night and just the whole thing, the architecture, even the fusion between it's a majority Muslim country combined with traditional Asian Confucian values. It's such a unique, it feels like a bridge across Asia, and it was really spectacular. I think we both enjoyed Morocco last year much more than we had anticipated. We actually enjoyed Turkey even more than I knew Turkey was going to be beautiful, but we enjoyed that more than we anticipated. Yeah, there's many beautiful places in the world, but over the last couple of years, those 2 or 3 places would be right at the top of our list.
Oh, that's awesome. Yeah, I haven't been to Asia yet, but my wife is half Japanese and her grandparents are there. So we want to bring our son, who's almost 9 months old, we want to take him to go meet his great grandparents there, especially because they're getting a little bit older. So when we do that, I've been saying if we're going to go all that way, we should go visit other places in the area. So we'll figure out how to fit Malaysia into the trip because that sounds amazing. I guess the other question on the business front, Jason, AI is a hot topic. There's a lot of solutions in market. We all are starting to rely on them every day, but there's I think unanswered questions around AI and how it will impact consumer and business behavior. One of the ones I have the most uncertainty about myself, and I haven't really been able to put my finger on it yet, is this agentic commerce. Obviously, with your background in the e-commerce world, where do you see that leading? Do you see that as being disruptive? Do you see it as like certain merchants will embrace it and generate a lot more revenue? Do you see like everybody having some form of agentic commerce support? Do you see it as not really being meaningful? It's just a plaything. Like, where do you see this ending up over the next 5 to 10 years?
Look, I think I can look out maybe 12 to 18 months at best right now. And what I'm seeing in the market is that agentic commerce is going to impact B2B e-commerce way sooner than retail. Everybody thought that it would impact retail e-commerce first because usually e-commerce in the retail world, it's much more advanced. It's 5 to 10 years ahead of B2B. But in this specific case, because the major agentic procurement or the major e-procurement platforms like the Jagger, the Coupa, the Ariba's of the world, they are all pushing agentic procurement very hard to automate the procurement process in B2B. They need an agentic sell side solution to be able to talk to and connect to. And so they are pushing it hard. The supply side is frantically trying to work out, okay, do we just slap an MCP server in front of our site? Like, how do we provide an agentic interface for third parties to engage with us and make agentic purchases through? Or how do we provide an agent that can speak to a human in a meaningful way to be able to facilitate the purchasing process? So absolutely, it's going to affect B2B sooner. I think agentic conversational AI is going to impact discovery on the retail side, and it already is massively impacting discovery, but I just can't see a world anytime soon where somebody like my wife is going to log into ChatGPT and say, go buy me this dress. I just can't see it yet. She likes going to the website. She likes browsing. She likes seeing what accessories she could put with it and like fully blown out pictures. And I think it's telling that ChatGPT was looking at getting into the transactional side, and then they pulled their horns back because I think they realized, geez, okay, we as a marketing platform will make far more money with far less risk by not being the merchant of record and just being like a Google Ads type of platform. It's far easier for us to do that than to actually execute the transaction. And so I really think agentic commerce is going to take much longer to catch on. I'm not saying it won't. I just think it's going to take a lot longer in the retail world, but in B2B, it's already making an impact. I've already got clients that are frantically trying to get AI into every layer of their business, because the other thing that's impacting B2B is that because their margins are so much smaller than retail margins, 3 to 4% net margins in B2B are pretty common. And so if you can claw back 0.5% in your procurement costs, that is material in the B2B world. So that's another reason why I think AI is becoming a really big deal, especially across Salesforce automation in B2B land, becoming a really big deal. Because historically, a lot of communication, a lot of transactional work has been done across email, Slack, Teams, WhatsApp, etc. Now we can have AI in the middle, intercepting a lot of those messages, a lot of those requests, and responding electronically in an automated fashion, and then escalating to human where required. That's also bringing a lot of efficiency to B2B that has never been available before.
I think you make a really good point too about the needs of the individual. Their need is to be involved in the process. When it comes to a business, that's the last thing they want to do is to be heavily involved, right? Because it's labor cost, right? For your wife, it's entertainment, it's fulfillment, it's psychological reward. For a business, that's cost. And so, it makes sense to say if you can disrupt that and cut that down or eliminate the human interface, then it's going to be the businesses that want that first. So that's a really interesting point. And I've been thinking about it mostly from the consumer perspective. And I agree with you. I don't see a scenario where most transactions are going to convert to that. Now, I think it will have some impact in certain areas, but I think by and large, as humans, we want to be involved to some degree. Maybe we don't want to go into the store physically. Maybe we don't want to have to do a ton of research. Maybe the research piece is the value there. It just says, here's what you're looking for. But we still want to be that person that's clicking the button and saying, yes, this is what I want. And so I think you make a very good point around that.
Yeah, I will caveat that by saying that general use personal agents, not chat bot agents, but literal I'm doing these things on behalf of you agents. Like I'm using Manus every single day now, and I've woven it into many different processes in my business now. It is phenomenal what
Mhm.
it can do. It is, and Google's just announced, they've just announced Gemini Spark, which is effectively going to be their version of a personal agent that's going to sit on top of Gemini, and it can be able to do things on your behalf and connect to your Google Workspace, etc. I'm really excited about personal agents being able to do busy things. Like I'm setting up agents that can scan my inbox and take inbound tickets from airlines and buses and everything else and automatically place calendar entries in for the different times that I need to. Like I'm just setting up workflows, agentic workflows for every menial repetitive task in my life that I possibly can. And I am still, even though I've been working with this stuff for like 2 years, I am amazed every day at how many more things I can automate in my life with these general purpose AI agents. It's pretty crazy. It is pretty crazy.
Yeah, and I mentioned my wife and I have an almost 9-month-old. I have 3 adult children, and people always ask me, is it easier or harder to have a kid again? Because I'm considerably older. I was in my 20s, now I'm in my 40s. I have a grandson now, for heaven's sake, and I'm having a baby again. But it is so much easier because of these tools that are available, AI being one of them. My wife literally goes into, I think she uses Gemini most of the time, but she'll put in, Canyon slept this time to this time, he ate at this time, and it'll tell us what we should do for the bedtime routine to get him to sleep the best tonight. And I'm like, I used to have to go to mom and dad if I had a problem, and if they didn't know, then I didn't know. My circle of information around child rearing was very small. And today it's like every human's now contributed in some way to this database that can tell me everything about rearing children. So it's really amazing how much it can influence the everyday stuff that we kind of see as like problematic or challenging in our lives. We can rely on AI to some degree to help us with that. And if it's nothing more than just information and access to the right products and stuff, but it's once you start to add the workflows on top of it and the agents to do some of the work for you, ordering diapers on a regular basis and knowing what size to order, like
Yep.
it can do all of that now. So it's pretty cool, but very impactful on the day to day.
Yeah, no question about it. Listen, fabulous conversation. It's been really a great learning experience for me. Really
Like,
exciting to hear what you're doing and what will you will continue to do at IoniaPay. I really appreciate your time. Thank you for spending it with me today, and I wish you every continuing success and can't wait to speak to you again soon. Thank you so much.
thank you.
Are you a B2B or D2C e-commerce merchant? Then head over to greenwoodconsulting.net to learn how we can help you scale your business.